Hi guys, a very good morning to all our viewers who've tuned into this live broadcast on Moneycontrol. You're watching Opening Bell with me, Stacy Pereira, and I'm here to take you through all those news and cues that you need to be watching out for that could go on to impact your trading day. So let's understand this. We are sitting at a point where we've just seen new fresh highs on both the benchmarks. We've seen the Bank Nifty also pretty much break that last record high level, although we did see some profit taking that took place at least for the Bank Nifty, but we are poised for further upside. At least that's the word on the street before we see any kind of consolidation or corrections. But let's discuss all of that and what's really going to be taking the indices further to those 23,000 levels, at least for the Nifty. Let's get our experts to tell us what will those factors really be. But before we get to all of that, let's take you through all the top headlines this hour. Wall Street indices closed near to flat line, where the stocks came under pressure as the 10-year yield surged to its highest level in 2024. Investors are now awaiting the March inflation data for the United States. And stocks in the Asia-Pacific region have opened higher despite that lackluster handover from Wall Street. The GIFT Nifty is also suggesting a positive start for the Indian markets. And crude prices have given up some ground, where Brent crude is trading around that $90 a barrel as Israel has gone on to cut its troop presence in Gaza. If you look at gold, that's at a record run where it continues to be above that $2,300 an ounce, buoyed by the buying by Asian central banks, which sees the yellow metal rise for the 7th straight session. And among stocks that you need to be watching out for, Tata Motors FY24 retail sales have risen by 22%, while JLR sales have risen by 20% on a year-on-year basis. In a couple of big block deals that you need to be watching out for, sources say that Bain Capital could sell up to 3.34 crore shares in Axis Bank in a $431 million block deal, whereas Gland Pharma could see about 4.4% equity exchange in a block deal today. So are we going to be hitting those new highs? Well, we have just about 10 minutes to go for that opening bell, where we're going to see which direction the markets really take. And as it looks like for now, we are seeing quite a bit of positive momentum, at least still remaining. But let me also take our viewers through all the future and option cues that you can be looking out for if you have to consider the put-call ratio, PCR, which is pretty much that sentiment indicator. That has risen to about 1.17 from the 1.26 that it was, to 1.26, I beg your pardon. So we are at that higher, pretty much showing that the put writers, which are your bulls in this case, are aggressively building on those positions compared to the call writers in the Nifty. Whereas if you look at the F&O ban and which stocks are there, well, the NSE has retained Bandhan Bank after that news we heard of the CEO stepping down yesterday. There's also SAIL as well as Z Entertainment Enterprise, which is in the F&O ban for April 9th. The NSE has though removed Hindustan Copper from this F&O ban list for today's trade. If you look at the fund flows and where the money has been coming and going, while FIIs, even though net they have been buyers all through April, and April is one of those months where we see good inflows. Yesterday, at least, we did see FII selling about 684.68 crore worth of shares, whereas it was the DIIs which then did the heavy kicking, and they bought in shares of 3,470.54 crore rupees. This in the provisional data that the NSE puts out. But let's get going and understand and discuss the stocks that are likely to be in spotlight. And joining me for that is Kunal Rambhia. He's the fund manager at the Streets. Good morning, Kunal. Nice to have you on the show this morning. We were just talking about, whether we can actually see enough positive momentum to take us higher towards that 23,000 levels. But what would be, we did see Nifty breaking out from that consolidation zone, at least in that last 5 trading sessions, where it managed to, pretty much stay above that 22,500 levels. And yesterday we saw the fresh all-time highs of 22,697. Will this uptrend really continue, or you could see some bit of dips, and whether then those dips will be good chances to be buying into the index?
Good morning. Thank you so much for having me on the show, and good morning to all our viewers also. So, if you look at the Nifty, yes, certainly we are in the uptrend, and the trend just continues. But the interesting observation here is that somewhere in the second week of March, we saw the dip of around 3.7%, where Nifty came down by almost around 800 to 850 points. And what we are witnessing right now is marginally up from those peaks of March. The Nifty is up by around 120 points so far. So yes, there is more room for upside, but at the same time, this rally is a very much stock specific rally. What we are seeing is a broader market not really participating even in the uptrend. So if you ask me about the view on Nifty, yes, certainly it remains bullish. It is positive. So right now it's trading at around 22,700 kind of mark, which is the opening right now. I think the trailing stop on this can be 22,450. Unless and until market breaks that level of 22,450, it's advisable to stay bullish on the indices. Buy on dip can be a good strategy, but by any chance, if we break 22,450, then I think we need to turn little cautious, and then we'll have to revisit the levels again.
So that level is 22,450 is what you're saying could be that support level that we need to be looking out for the Nifty. But like I was mentioning, now April has historically been one of those best performing months for the Nifty, which is probably why we're seeing this kind of rally so far. But even you did mention about how the broader indices, perhaps the mid cap and small cap, haven't really been as, at least in yesterday's session, they were not really matching up to what the benchmarks were really seeing. So do you think that correction is still in place for the mid and small cap because of that whole rotation that we saw in March? Or do you think these are other factors at play, and what could those be then?
See, again, if we keep our discussion to the numbers itself, then on the Fin Nifty front, we haven't even crossed the high of March. And certainly on the mid cap Nifty, we are still very much lower than the peak of March. So, as just we discussed, that the indices may just catch up. But for now, the trend is positive, but somewhere those side indices are looking tired also. So, if I were to go literally aggressive on the markets, I'll go and think of shorting the markets from these levels on the stock specific fronts. I'll not short indices certainly, but on the stock specific, we can definitely think of shorting. But if the markets come down to those 22,450 levels, which we discussed, then we'll have to revisit and see if we're getting bargain buying opportunities or it's going to be again a short continuation. So it's a tricky phase right now. We are near to the resistance mark. So overall, we'll have to be a little cautious.
Right. Do stay on with us. Let's address a couple of stocks that will be in focus. And we were talking about how block deals and how so many companies are now really going to the capital markets looking to raise funds and others. Block deals being one of those mediums that we've seen companies really put out their shares or, exchange those big bulk shares that we see. And one of them being Gland Pharma. Now, they've given to understand that this block deal has been launched, and it's Nicomac Machinery as well as RP Advisory Services, which is likely to sell up to 4.4% equity in the company. Now, this will be at a floor price of about 1,725 rupees per share, which if you have to look at by the last closing price, it comes at a discount of about 7.34%. Now, this offer size too of the block deal is likely to be somewhere around 1,400 odd crores, which is why it's quite a big amount there. And we're given to understand that Citigroup is the sole book runner for this deal. So Gland Pharma is something that you need to be watching out for, and has been a buzz. That stock there on your screens also, you can see those highs and lows that it has seen in the last few sessions. Another block deal that is doing the rounds of the buzz is from Axis Bank that we're picking up, and this about Bain Capital, which is likely to sell up to 3.3 crore shares in Axis Bank, this via the block deal, of course. And this offer size would be somewhere close to $431 million. Now, the offer price for the book is also somewhere ranged around 1,071 versus to about 1,076 per share. And this offer size could then be just about a discount of 0.5%. So you can see not much really that Bain Capital would get there, but there were attempts in the past as well where Bain Capital was looking to exit, but this one perhaps will be that moment if at all this deal is going through. Let me bring back Kunal and ask him how really one is supposed to be playing these games, because we've been seeing so many companies come to the market with various QIPs at the moment, all of them, rather some of them at discount. We've seen block deals that are going through where, a lot of them are looking to exit, a lot of them making money as well. But for this particular one, for Axis Bank, how do you think somebody who's looking at this stock, because banking stocks have been quite, in the fore at this point. So Axis Bank, for that matter, what would be your take on it?
See, we have seen the overall PSU banks have really outperformed on these large private sector banks. And as far as the Axis Bank is concerned, there was more of a sideways consolidation which was witnessed from November so far. If you look at the last 4 months' performance, the counter was somewhere trading near to 1040. It just went up to almost 1200 and back to those 1040, 1060 kind of levels. So it's not really outperforming. Forget about outperformance. It's not even participating in the ongoing rally. So if I were to look at this entire broader consolidation, I would consider this to be like a time correction. As the market participant, I'll think of approaching this counter when it reaches near to 1040, where the risk reward ratio is going to be extremely favorable. Or if at all I wish to capture the upcoming rally, then I'll wait for the counter to give a breakout of at least 1100 mark decisively. Closing above 1100 can open the doors till I think around 1350 kind of levels. But till then, this sideways consolidation of 1100 to 1040 is likely to continue. So advisable to wait for the correction and buy on those dips, which we got at least 3 to 4 times in the last 4 months.
Right. So that was Axis Bank. What about Gland Pharma and the pharma pack as a whole? Quite a bit of activity happening even in the pharma space. Ahead of the earnings, we've seen a good set of earnings, at least in Q3, because there was good price realization, especially the pharma companies that are exporting did quite well in Q3. But do you think there is more momentum for pharma stocks, and Gland Pharma in particular, if anyone is looking at this deal and whether they could actually benefit from this?
Absolutely. Again, I give a lot of importance to risk and reward ratio. So if I look at Gland Pharma, the counter which was trading at 4,400, 4,500 came down to as low as 859. And from there, what we are seeing is a new upcoming rally on the chart. It's been again in sideways consolidation for last 3 to 4 months, but the risk reward ratio, even for the longs from the present level, is very, very favorable. So at the present level, one can certainly think of initiating a buy. I think there is a lot of room for upside for almost all the pharma sectors, but for Gland Pharma with the stop loss of 1650, one can certainly initiate a buy. The first conservative target on this can be 2175, 2200, which we saw somewhere in the month of January and February. And above that, the levels can the sky is open till I think around 2500 to 2600. Again, it's a positional view, but one can certainly strategize the approach by keeping the stop losses in mind, which right now seems to be good at 1650 kind of levels.
Right. So that was the view on Gland Pharma. There are some reasons where you could actually consider that stock, but we have barely a few seconds to market open. Let me quickly say another stock that could be a buzz could be Tata Motors. Now there are brokerage calls as well that has come, but they've gone on to give their Q4 update, wherein JLR has reported about 20% year-on-year growth in its full year sales, as that because on the back of improved production as well as that sustained global demand. Their wholesale volumes have increased to about 1.1 lakh units in the Q4 of FY24. This excluding their China JV, which means they're up by about 16%. That is the wholesale, whereas retail sales are up by about 11%. So we are going to see some action there in that Tata Motors stock. But let's address the market open there for you. Nifty comfortably up there at 22,700 odd levels. So a good uptick, we could say. We of course on expected lines, because that momentum is likely to move forward from here on. So 0.2% gain for the Nifty. The Sensex also there seeing some good traction, about 200 odd points that it has picked on, quite close to that 75,000 levels, one would say, and not too far away. We could anticipate that pretty much in these early trading hours, pretty much minutes of this early trade itself. The Bank Nifty, they're also seeing some good action, 48,600 above, which was that highs that it had conquered yesterday. So fresh highs that we're going to see even on these indices, the mid-cap and small-cap index, also the broader indices, even though yesterday wasn't such a big good day for them, and we just saw about 0.3 and 0.5% of gains for both of those counters. Today we are seeing much greater momentum, at least in the small cap indices. You're seeing almost 0.5% of gains there on the BSE small cap index. Let's look at other sectoral indices. Nifty IT also, they're quite positive, almost close to 0.5% gains for the IT pack as well. Pharma, something that we've been talking about, that one also seeing some good momentum, we would say positive at this point. FMCG, though, is the one looking at some bit of pressure, especially because ahead of the earnings, we normally do tend to see some bit of flip-flops there. We've also heard from the IMD about how it is going to be a really hot summer, so FMCG stocks are perhaps reacting to all of those news and cues that are coming in. Your consumption basket, though, is in the positive, as well as metals. Now, yesterday, metals were among the top gainers in trade, and you're seeing that pack continue in the positive, comfortably in the green as well. Auto is another component. Yesterday, Eicher Motors saw gains of close to about 5% odd, and pretty much, adding to this to the Nifty auto basket. You're seeing most of those components also in the positive. Nifty Realty Index also there. I think that's the top gainer on your screens. They're about almost close to 2% of gains there for the Nifty Realty Index. So that's pretty much what your main sectoral indices are doing. But let's see on your screens, you also have the top gainers and losers. You have Tata Motors, of course. There's also Infosys, surprisingly, that is there. Shriram Finance, another one that is making its way to the gainers list. BPCL, Power Grid, as well as Bharti Airtel are some of your other names on the gainers list. You have Bajaj Finserv, Hero Motocorp, as well as Apollo Hospital. So quite a few good auto names that you're seeing there on your gainers list, making it that from Tata Motors, as well as, even the two-wheelers, Hero Motocorp, they're in the positive. So quite interesting to see, and those components is what we were expecting to see them after the news flow that has come in, especially for Tata Motors. Maybe Kunal can come in on the auto pack, and how should one be, looking at it, and especially if he has any specific stocks that he would like to recommend within the auto pack, and why, what would be the rationale there?
See, certainly the entire auto pack has done phenomenally well in the recent times. If you look at Tata Motors, yes, the rally is remarkable. I mean, the first rally, which the breakout first came, which somewhere in September and October 2023, and there was near to 650. The counter has not even shown a single lower top, lower bottom. It's just continuing even today, very strong in today's market also. So, and look at Maruti again, that counter is doing phenomenally well. So, yes, the trend continues on such kind of counters where the trends are really very strong. It's advisable to always keep a trailing stop loss and hold the position. So on Tata Motors, yes, there is a buy recommendation. And if someone wants to initiate a buy, even at the today's level, with the stop loss of 975, one can certainly buy, and the targets can be open till around 1100 to 1125. Similarly goes with Maruti. If you look at the chart, it's very much trending even in today's price, which is at 12,900. Now that's very much elevated and near to all-time high. So if the counter comes down to say 12,600, then with the stop loss of 12,000, one can keep on buying such counters which are trending, rather than just waiting for the correction to come in, or say rather than anticipating too much on the upside being done. One should participate in such kind of rallies to make real good wealth. So yes, overall bullish on the entire auto pack.
Right. So interesting that we're talking about Tata Motors. There's also Morgan Stanley that has come out with its brokerage report on Tata Motors, where they maintain that overweight call with a target price of about 1,013. Of course, this on the back of those updates that came where JLR Q4 sales, as well as the global EV slowdown, though, has not really changed much for Tata Motors, even though they have been a bit cautionary note on how the slower EV adoption could then actually go on to facilitate something for Tata Motors, which is pretty much the leader when it comes to EVs, at least in India. Their outlook on the capital return profile is also something that they've highlighted, whereas the EV transition could actually have been highly disrupted for their business, but they are seeing that really play out in the positive for them, and which is why they are still overweight on the counter. This is Morgan Stanley on Tata Motors. Another brokerage report that we would be addressing is what Citi has on Jindal Steel and Power. Now, quite interestingly, this counter has also been in the news of late, and we've been seeing pretty much most of those metal and steel names in the positive, seeing some good momentum. But here today, Citi has gone on to maintain a sell call on JSPL with a target price of about 685 per share. They see that the opening downside of about that 90-day catalyst is what they're saying to watch out for. Also that weakness in volume, and they see very limited pricing upside on this counter. So JSPL, they're pretty much facing the brunt of perhaps this brokerage call as well, which continues to have a sell call on this. They do think that their Q4 volumes though will likely disappoint on a YOY basis, and that pricing upside may appear limited on likely strong long production in India on that improved coal supplies is what we are hearing Citi say on JSPL. But interestingly, let me go back to Kunal and ask him about the metal pack. In fact, not just metal, let's also speak about realty, because most of these components, or at least the raw materials, have really helped what we're seeing happen in the realty index. So what is your call on that? Is there more upside, do you think, and any stock specifics in this basket that you would consider?
See, again, the realty index is doing phenomenally well. If you look at the recent, even today's trade, it's making an all-time high. I would really call it as a crime to call the top right now on the entire sector. Yes, we are very bullish, and the advisable strategy here again is keep on buying on decline and keep a trailing stop loss for the entire position. The best pick among the entire sector, I personally like, is a DLF. This counter has delivered really good results. On the price action front, at least, it's clearly making higher top, higher bottom formation. So with the stop loss of 880, one can initiate a buy even at the present level. By any chance, if the counter is available at little lower prices, then the risk reward ratio would even be favorable. We are maintaining the target of around 1050 on DLF, which is the best pick among the entire real estate sector.
Right, interesting. We will come back to you, Kunal. Do stay on with us, because we will try and address a couple of queries that are trickling in. And I do request all of our viewers to continue sending us their queries so that we have them addressed and they can go on to trade those bets that they would have. But let me also get the broader perspective of where markets are really heading. And joining me for that is Rishi Kohli. He's the managing partner and CIO for the Hedge Fund Strategies at InCred Alternative Investments. Good morning, Rishi, and good to have you with us this morning. Let's get a sense of how we are seeing markets. We are at that historic moment where we've seen BSE listed firms and the market capitalization of them hit that 400 lakh crore mark yesterday for the first time, and BSE had managed to achieve just that 100 lakh crore back in 2014. So it's taken us 10 years, but we've seen this huge jump, and we're seeing so many people enter the markets. Do you still think, now that we are at these highs, do you still think people could, it would be a good time, or whether people should actually wait for that correction and then come in?
Yeah, good morning. Happy to be here. That's a very interesting question at a very opportune time, given that, elections are just around the corner. And obviously, this is a, typical question that all of us would have. So just taking a step back to give the larger perspective, interestingly, you mentioned that, since 2014, some data, etc. So, 10 years have gone by. So very interesting, really, really long term, if you look at it. Then, post the 2003 to 7 big bull market that we saw, and the decline post that in 2008 and 9, and some rally again in 2010, and then sort of markets kept trending up post 2010, but it was in a very, very low pace. So in fact, if you see the 2010 to 20, annualized returns at the index Nifty Sensex level, they are among the poorest, going back many decades. So that decadal return was really, really low. And then we sort of broke out of that sort of sideways uptrending slightly channel in end of 2020. So, when you break out of a 10-year long channel, even though it was slightly upward sloping, obviously you're talking of very, very long-term sort of bullishness. And, at some point, I've said in media interviews that the next 10, 15 years are going to be very, very strong for India. So that is the larger backdrop. Now, within that, of course, you're having ups and downs since the end of 2020. Interestingly, from October 21 to June 23, again, more than 1.5 years, you had this consolidation in markets at an index level. And then in July 23, really you broke out of that. And then again, post a few more months of consolidation in December 23, again, a more firm sort of breakout has happened. So when you combine these long-term cycles and long-term patterns with the immediate, signals that have come in, then yes, I mean, the long-term 10, 15-year view remains positive. The medium-term 2-3-year view remains positive given the July 23 and December 23 breakouts. In the near term, of course, we are all cautious because of the upcoming elections. What I think is, has high probability to happen is that we continue to be bullish going into the elections. April typically has a very strong seasonality. So apart from November, December, the last 2 months of the year, April is the other month in the year which has very strong seasonality. And, unless really some global news or geopolitics happens, markets typically around the world end up being positive. Initial part of this month, again, you've had some positive technical signals on both Nifty, Bank Nifty index. What is interesting is that April, while seasonally it is strong for both Nifty, Bank Nifty indices, typically it has been stronger for the banking index.
Right.
And given that banking index has, underperformed Nifty last few months, and even on a relative ratio basis, Bank Nifty by Nifty ratio sort of hit its oversold and support levels. There is a high probability that over April and May, Bank Nifty index, will do much better, and both on an absolute and a relative basis.
Right. Rishi,
Post that, of course, the election thing will take over, and it's a binary event. While largely a lot of expectations are priced in, and as long as that sort of happens, all may be stable. But even if there is some minor change in whatever the market expectations are, even if everything is smooth, there could be some volatility post that in June, July.
right.
So
Rishi, I'll have to just take one moment from you here, because yes, you are speaking about those broader factors that could come into play. It is pretty much that wait and watch game, at least till the election, but that's not stopping people from really entering the market, at least if you have to see where they're really putting their money. Now, you did speak about the Bank Nifty, and we saw that make that all-time fresh highs of about 48,717 yesterday. It's pretty much ticking on those same lines right now, breaking those levels that you saw. But earlier in March, at least, we did see that index pretty much crack by 9%. We saw that huge drubbing that HDFC particularly also saw. But among the banking pack, and maybe I can take this question to Kunal, because there are a couple of queries that is coming on ICICI Bank per se. We did see this, we are hearing of news about a block deal in Axis Bank. So maybe on ICICI Bank, Kunal, what would be your take? And that would perhaps also answer Vikram Mehra's question on how should one be looking at ICICI Bank.
Broader consolidation on the chart. If I look at the intraday chart, because assuming this is a short-term query, from March so far, it's been almost 1 month and 10 days. The counter has been in sideways consolidation, support being 1070. And on the higher side, counter is facing the resistance at around 1105. So right now it's in between. If our viewer is holding on to the position, then with the stop loss of 1085, which is a trailing stop loss, one can hold on, and he has to book the profits near 1105. By any chance counter manages to cross 1110, then certainly we can initiate a fresh long. Otherwise, be cautious near these levels.
Right. One more query that I'd want you to address, Kunal, and this is coming from Naveen Tyagi. He's asking that he has started stock SIPs, and this perhaps could help a broader set of viewers as well. And this he's taken 4 market heavyweights, Reliance, ITC, L&T and Infosys is what he's picked. He's asking whether it is okay to start this stock SIP at the current levels of where these stocks are. Maybe you can just throw some light on how this really works, and whether stock SIP and with these index heavyweights, what will they really be offering?
See, again, there are different types of investing, right? So if we talk about SIP, the interesting part of SIP is that your money amount will go regularly in the market, but at the same time, when the markets decline, your contribution will remain the same, but the number of shares will increase in your portfolio. So yes, from SIP point of view, there is no problem. You can start buying even from the present level and continue doing it. The consistency is something which matters a lot when it comes to SIP. Just continue for next 5 years, certainly will end up making really good money. But I follow a little different approach, and that is I start investing only when there are headlines in the newspapers which are looking very scary. I start buying when the margin of safety is very high for my personal investments. So yes, SIP definitely works at the present level, but the good risk reward ratio is certainly not on cards. SIP in large caps which are like Reliance, which is trading really good and which is doing really good at the near to the high, would not really make sense to me. Rather, private banking stocks are looking really good. So even from the present level to say next 1 year, I think private sector banks allocation can be little higher compared to the Reliances of the world which are near to the high. But
Right.
SIP is a different story altogether. Investor can definitely continue for next 5 years even
Right.
from the present levels.
Yeah, so SIPs are pretty much playing it safe, and especially if you've seen these heavyweights and how they've been performing in the past few sessions, at least they're pretty much lending that momentum to the benchmarks, we could say. But we're also pretty much at the cusp of the Q4 earnings season as well. And if you have to see, profit growth of the Nifty 50 companies is likely to be the slowest in the last 5 quarters. At least brokerages are estimating this for this upcoming Q4 results. Let me go back to Rishi and ask him if he's also anticipating some bit of trouble when it comes to these Q4 results, or do you think that is pretty much going to be what is going to drive the market momentum ahead?
Yeah, no. So, I mean, the view there is broadly what you mentioned, that there is definitely a slowdown in the last quarter, and obviously it will be mixed depending on the sectors, etc. But as we know, right, markets move 3 to 6 months ahead. I mean, I personally believe 6 months ahead, but I mean, there's a whole host of data all across the spectrum. So given that, I would say it's largely sort of factored in some sense. And the other interesting point is that obviously, sector rotation will continue. So what is important, and from a quantitative perspective, since I'm a quant guy, there is sector rotation models that we have. And what is very interesting is that whether it's bull markets, bear markets, sideways markets, the tough patch in 21, 22, or the bullish last 6, 9 months, there are always certain sectors and stocks, obviously, in those sectors that are doing well. And I expect nothing different in the next 3 to 6 months. Even if there is some volatility in that June, July period, or some hiccups in April in some sectors where the numbers come in poorer, despite that, there would be others that would be doing well. So I think as long as one has a sort of a relative strength, relative momentum kind of approach on sectors as well, I think that can be very healthy in the next few months, even if there is volatility or toughness in certain market sectors.
But do you expect
And
any
yeah.
do you expect any major FII inflows at least into the Indian markets, given that we're almost going to see that inclusion into that global emerging market bond index as well? That could really change the picture, or do you think people will take some time to understand what really is happening there?
No, I agree. I think the emerging market global bond index inclusion, clearly the fixed income flows will start coming immediately, because as you know, every month for a year, those large flows are going to come from June onwards. So I think, I mean, those bond market flows obviously are going to come, and along with that, a lot of other FPIs, which are more fixed income players, will come in. From the equity side, of course, it will be mixed. Because I think for now, there would be the normal flows heading into elections. Obviously, people will still wait and watch. Post that, I would expect it to increase again. If market sort of holds up, there's no large correction, etc., then it would come in immediately. If there is any correction post elections, then they would again wait and watch. But I've seen this in the past also many times over the last 20 years, that flow momentum really follows the market momentum. So they would be slow initially, but if the market momentum continues, all is well. Then there would be a significant flow in the last 4, 5 months of the year, according to me.
Right. Well, hold your thought. Let me try and get one more query answered there by Kunal, and this one is on Castrol that is coming in. Ashish Diwan wants to know your view on, sorry, Alex wants to know your view on Castrol India, and how should, what are the charts really saying on this particular counter?
See, more of a sideways consolidation counter, but yes, it's trading near to the breakout point, and that breakout point is somewhere near to 212.13, which is almost the current market price. By any chance the counter manages to close above that 212.13 kind of mark decisively, I think it can give a momentum trade from here with the stop loss of around 203. One can then initiate a buy with a target of around 225. But because our viewer is already holding, assuming he is holding on to the position, for now, the trailing stop loss is 205. Hold on with that trailing stop loss. If the counter manages to close about 213, I think a quick momentum rally might just emerge on this.
One more, and a rather new one, we would say, and I don't know whether you would have this coverage of IREDA, and that counter has been seeing some great momentum. In fact, just a few days back, it was among the top gainers, 10% odd gains that it saw in a single day. But what's the view on IREDA?
So this is a counter which we can't avoid when we come on media, at least, because this has been a regular query counter. If you
Right.
look at the overall trend, it's a trending counter. But the only trouble on this counter, which I felt, is that there is a risk management which goes for toss because of circuit behavior of the counter. But yeah, nonetheless, right now the counter is in positive trend, 122 to 170, 180 kind of rally, which was again a very steep rally, very fast rally. With the trailing stop loss of 160, one can certainly hold on. I would really avoid this counter when the markets are at the peak, because by any chance, if the market declines and the counter continues with the decline, we might not be even able to get an exit. But if someone is willing to hold on with the stop loss of 160, one can certainly ride the positive rally so far.
Right. So you're pretty much cautious, we would say, about IREDA, and there is a way to play that counter, but quite interesting there. And hope that answers Vishwa Jarin as well as Harish Prashahar's query on IREDA particularly. But my final question, maybe you, Kunal, can only wrap it up for us and give us what would be his top picks of the trade today, and maybe even in a longer term, if somebody is looking at what would be your top picks, and then I would go back to Rishi to get his sectoral picks. Kunal, to you first.
Yeah, so I have three counters now. These counters are certainly not for the day or 2 days. It's going to be for next 10 to 15 days. The first one is Strides Pharma. Now, Strides Pharma in today's session also made a 52 weeks high. It's trading right now at 846. Now, one can think of accumulating this counter at the present level. Stop loss can be 825, and the targets can be 900 in the mid to long term. The second counter is IDBI Bank. Now, what we are seeing is this counter is being in sideways consolidation since last 3 days. Counter showed a very good momentum yesterday, but again, still in sideways consolidation with the present level of 89.5. One can initiate a buy. The stop loss will be around 87, and the first target will be 100, and then we'll keep revising the targets again. And the third one is JSW Infra. Now, this counter is right now trading at 245, very much in trend, sideways consolidation since last 3 to 4 days. I think this is offering a good risk reward ratio. So, with the stop loss of around 240, one can initiate a buy even at JSW Infra, and the targets can be 265. All three counters are looking very positive, even from mid to long term. If the rally emerges, the request to all our viewers will be come back to our show again, ask your query to someone who is available for the trailing stop loss, and hold the position for long term. I think it can reward really good if the rally emerges strong.
Right, quite interesting picks that Kunal has there for our viewers. But quickly to Rishi Kohli, then, what are your top three themes that you would be looking out for, that you see playing out, and how should one be then looking at them?
Sure. So, from an immediate sort of sector perspective, we discussed banks. I think metals is the other interesting one. Historically, it has been more cyclical, but what we are seeing over the last 1 or 2 years is that it's sort of become more secular. And given certain, again, patterns, breakouts, and longer-term cycles that have developed, there's something cooking there. It looks like, it could be not only in the near term, but also sort of a medium to long term, continue to be bullish. And interestingly, even globally, the metal index and the global commodities index, etc., have broken out after 10 or 15 years, depending on which index globally you're looking at. So the local, obviously metals and commodities, as we know, is more a global theme. And both globally and locally, they've given very positive medium to long-term signals. So metals is something definitely I would keep on the radar. And given that, the metal stocks move large whenever there is momentum, there could be good gains to be had there. And then real estate and infra, I mean, that is a broader theme again over the last 6 to 12 months. I mean, they've done well, but I think those are something that going into elections as well should do very well. And again, in the medium to long term, should do very well. And again, some of the real estate names, especially, can end up moving really big as the momentum picks up. So those couple of sectors, I think, could give outsized returns compared to other things. And apart from those two, which could give outsized returns, the normal ones we discussed, bank, and within bank specifically, I mean, obviously, private banks have underperformed, but I think that phase seems to be over. So I think they'll start outperforming again. And then within PSU banks, the larger ones have obviously already moved a lot in the last 2 3 years. I think the mid-tier PSU banks could start doing much better as well.
Right.
So those are the pockets that I would focus on.
Interesting. So you have banks among those sectoral plays, and you'd prefer the private banks within that space. You also have metals, which is being, hammering quite higher, we would say, taking those indices as well as higher. And the other player definitely being real estate, that among your top gainers today. In fact, the realty index also seeing some good momentum in today's trade. But we are sitting quite comfortably. We just saw Sensex, surpass that 75,000 level there at opening bell just now, just a few points below that target. The bank Nifty also trading a little flat, we would say, at this point, but we have the whole day to go and trades to make. So perhaps all of that will go into play to see newer highs that pretty much most of these indices are taking on. But let me thank both my guests, Kunal Rambhia as well as Rishi Kohli, for joining us this morning and giving us their views and perspective on stocks as well as sectors that we could be looking out for in our trading day. Well, to all our viewers who've tuned in, thank you so much. Do come back and send us all your feedback, because that's what we're going to be addressing and changing perhaps to meet your needs. But also do send us your queries, because that's what we try to answer through the course of this show. So you can send it to us on our live feed, and that's when we can ask our technical experts to give you and help you with your trade. But for everyone that's tuned in and the whole team that puts this together, thanks so much for watching.